The first in, first out or FIFO system is going to be a topic that comes up not just on this SAC, but on most SACs for the rest of the year. And it's important because so far on the assessments we've given you the cost of sale almost every time. So, for example, in a question we might have said the firm, 1 unit of stock for $400 was sold, plus $40 GST, and the cost of that sale was $200. So you can see in red there, the cost of sale has been given to you. But what if it wasn't? What if the question just said, a unit of stock was sold and you needed to figure out the cost? So in the real world, how did the firm arrive at a cost price of $200? So the cost of any stock is just the amount that was actually incurred to buy it. So we could go out to the stock room and just find which bit of inventory was sold. So look at the stock room for this business. You can see there's 15 units of inventory out there, but they've all got different prices. You can see some are valued at $220, some are valued at $210, some are valued at $200. So how do I know that the unit that was sold was a $200 unit? Why wasn't it a $210 or a $220 unit? And what we need to realize is that we need a rule or a system to figure this out. And that system is going to be called FIFO, or first in, first out. So using an analogy, here's our stock room again. Let's say on March the 1st, the business bought 5 units of stock for $200 each. On March the 9th, the business bought 3 units for $210 each. And then on March the 16th, we bought 7 units for $220 each. And there they are, just sitting in a pile. And then on March the 20th, we've got 15 units of stock. And then a customer comes in and buys 3 units. And they pay $1,100 plus GST. What is the cost of this sale? So we've sold 3 units. It depends on which 3 units of stock the salesperson grabs. So if they go out the back and have all the stock stored nice and neatly and accurately, it really, is it actually going to be like that? Probably not. Probably going to be scrambled all over the place. So you can see here we've got some 220s on top, some 210s, some 200s, and there's no system to that. So how do I know which one they grab? Another thing that makes it more difficult is that they're probably not different colors. They're probably all going to be the same color. That makes it even more difficult. So how do I know which unit was grabbed? So in this case, what if they grabbed those 3 units there? So we've got a 220, a 210, and a 200. The cost of that sale is $630. But maybe the next salesperson's a bit different. Instead of grabbing the 3 on top, maybe they grabbed those 3. So they took a 220, a 220, and a 220. That's a cost of sale of $660. What about a third person grabbed those 3 there? They took a 200, a 210, and a 210. The cost of that sale is $620. So what we got was 3 situations. In each case we sold 3 units, but to get the cost of sale, we ended up with a different amount. Situation 1, we had those 3 units for a cost of $630. Situation 2, we had 3 units at $220 for $660. And situation 3, we had 1 200 and 2 210s for a cost of $620. So the question becomes, which figure is correct? 630, 660, or 620? And the answer, funnily enough, is we don't really care. It's too difficult to calculate, so it doesn't matter. What we're going to do is, rather than actually find the literal cost of sale, we're just going to apply an assumption called FIFO. It can be nearly impossible to figure out what each unit of stock cost when it's actually sold. So what we do is use first in, first out. What we're going to do is assume it's kind of a metaphor, and what we mean by that is the stock, while not literally stacked in this order, we're going to, in our mind's eye, pretend that the stock is stored in the order in which it was bought. So you can see the first lot of stock, the first stock that was in, was the stock on March the 1st. Then in another neat little pile, we've got the stock on March the 9th here. And then lastly, we bought the stock on March the 16th. Now, is it stored out the back in nice neat piles like that? Absolutely not. It's probably not. The point is, metaphorically, it is. We're going to assume it is stored exactly like that. And the reason we're doing that is now when, and we can see under here, we've got a little what's going to end up, we're going to call a stock card, showing the quantities of each unit and the cost of each unit and so on. And what that means is, if a customer comes in and buys 3 units today, which 3 did they buy? Well, we don't need to waste time and figure out which 3 actually were sold. And the reason why is because we're just going to assume it must have been the top three there. They were the first ones in, so we'll assume that they're the first ones out. So the cost of that sale would be $600. And you can see here our stock card has been updated to say there's 2 left at 200, 3 left at, so there's the 3 left at 210, and then we've got 7 left at 220. Now, the next day we sell 4 units. Which 4? Well, I don't really know. Literally, I can't figure out which ones they are. What I'll assume though is it must be the last 2 $200 units, then it must have been the top 2 from the next pile. So that would be a cost of sale of $820, and that would leave me with a little stock card here saying that there's 1 unit left at 210 and 7 units at 220. Now that's probably not the case. That's probably not what is actually left. This is just an assumption. So what about the next day if we sold another 2 units? Which 2 would they be? Well, we'll assume first in, first out. So that must be the last 210 and one of those $220 units for a cost of sale of $430. And we'll assume that that must leave only 6 units left at $220. Again, probably not accurate. The point is it doesn't matter. We're just going to assume that the first units in were the first units sold.